Hello, this is the tradesight U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, October 28th, 2013, ending in Friday, November 1st, 2013, beginning of the last 2 months of the year in sight here as we approach November. Just a note for our viewers, we are changing our course pricing for the stock course at the end of this week to a 6-month mentoring package, which we think is going to be very valuable for traders to learn how to trade over the course of 6 months with us. This will change the pricing of the course, however. We're going to be charging $3,500 for the 6-month package. That's about twice as much as the current existing stock course, which is a one-time purchase. That change will occur at the end of the week. Anyone who purchases the stock course this week for the existing $17.97 price will get the existing course material and the new course material as it becomes available. Once the price is changed on the website, it will no longer be available at the existing price. Charts for this presentation, as well as for the 6-month mentoring package, brought to you by eSignal 11, as usual. Here's a look at the S&P daily chart, closing at new highs for the week on Friday at 1759.77. We have a 9-bar up setup. We're just beginning a new seeker count. The last 13 gave us a sell back here during the government shutdown period. Note that that 13 took a while to play out because the seeker setup count for that started at the end of June. We didn't get the 13 until September. Here's a look at the NDX, on the other hand, which had a 13 sell signal this week and is playing with the risk line now. So unless we basically top out right here and start to head lower, we're going to bust that risk line. And you know what happens when you bust these risk lines quickly? It usually means an acceleration to the other direction, which would be to the upside here. So we're going to watch that area very carefully on the NDX. Here's the SOX index. Also had a 13 sell signal and then plunged on Tuesday going into Wednesday. So far that signal is in place. And here's the biotech index, which has been doing fairly well. Had a sharp sell-off on the days of the government shutdown leading up to it, and now reversed back to near highs. It has a 9-bar setup phase to the upside here. So that's what we're seeing in the markets. Again, new highs, but some indications of a possible top. And I would say if you get about one decent up day in here, it's going to lead to some acceleration to the upside because we're going to throw off that NDX sell signal. Here's the oil. Finally broke 100 as we had been predicting, and you can see that static trend line back at 94 would be the easy first target here. It's not the time of year anymore for oil prices to remain high. Hurricane season kind of dying off, summer kind of dying off. So oil prices tend to retreat. We'll see if we can actually get a move back into the 80s. That will be interesting to see on the oil index. And here's a look at gold. Not much there. Pretty much where it's been for a couple months. Let's take a look at some of our key stocks. We'll take a look at Apple to begin with. Back to 530 on Apple with some gaps left below. Nice breakout this week on their iPad announcement. Here's a look at the new iPad Air, by the way. Here's a look at Google, which had a big gap up on earnings and is over 1,000 now. 9-bar setup to the upside here. They had an event on Thursday that wasn't the event people have been looking for. They do have a new phone, the Nexus 5, and potentially the new Nexus 10 tablet, along with the much anticipated look at their next operating system, which is called KitKat, that everybody's been waiting for. This will be a big leap in the operating system. It's not an incremental leap. That is expected actually this week, although there's no date announcements yet. Here's a look at Amazon. Had a positive day on Friday, big gap up and kept going. Look at Netflix. Now keep in mind, we are now in that time of year where stocks that have been up for the year, where people who are invested in these stocks selling them would lead to a large tax consequence because they'd have to pay taxes on the gain. If we get to this point in the year, usually into November, and people become less likely to sell stocks that are up solidly for the year because they don't want to lock in and have to pay the taxes. They can sell them January 2nd and postpone the taxes for a year, come up with other tax write-offs against them over the course of 2014. What that means is a lot of these stocks that have been up, like Google, like Netflix, like Amazon, like Apple, probably are going to see a lot less selling pressure over the next 2 months, which means it's a lot easier for them to continue to go higher unless something drastic happens in the market. And now that we've got any potential government shutdown and any debt ceiling issues pushed off till 2014, it's hard to see what would compel the market significantly lower. So keep that in mind in your trading of these stocks. It's going to be tough for them to head down. Let's take a look at what happened this week intraday on the futures. This is 10-minute bars. So you've got here Friday, Thursday, Wednesday, Tuesday, Monday. Last Friday's close, we had a little gap up, filled it, fairly flat on Monday. Tuesday, big gap up, did not fill it, closed higher. Then Wednesday, we gapped back down and filled the gap from Tuesday. Remember, 80% of gaps fill the same day, 95% fill that week. Then we gapped, then we opened flat on Thursday and cruised up to fill that gap from that day. So now all the gaps from the week are filled. We had a flat open on Friday and went nowhere at all. Overall, the volume was up for the week. NASDAQ actually closed over 2 billion shares twice. However, I would say the action on Wednesday, Thursday, and Friday was some of the poorest we've seen in a while. So it's interesting to see volume up, but the action going nowhere. Thursday in particular, this was just horrific action. I mean, it was about a 7-point range, but 3 points of it was in the last 20 minutes. Just not what you want to see out of the market. We expect a lot more action activity this time of year, especially when you get the volume back. Here's a look at the NASDAQ side just to show you what that looks like. A little less positive, didn't quite close as strong for the week, but filled all its gaps. And the net gain for the week here on the NASDAQ, about 35 points in total. Let's take a look at our economic data that's due this week here in the U.S. Go through it all. Remember, some of this data is coming out on strange days still because of the government shutdown. So until they get caught up. So here's industrial production capacity utilization. Should have come out 2 Fridays ago, just coming out on Monday now. Not a big deal to the market. Pending home sales 30 minutes in. On Tuesday, retail sales PPI. That's some big data. That could cause a gap. And then business inventories and consumer confidence 30 minutes in. That could move the market around. I look for Tuesday morning to be interesting. Wednesday, MBA mortgage index, ADP, employment change. We've got the first look at GDP, U.S. GDP. The first look, this is a quarterly number, the first time you get it for the third quarter. This is a big number. This could cause a gap in the morning. We also have CPI coming out at the same time. So a couple of our big data points coming out on Wednesday. But we also have a Fed announcement. We have a 2-day Fed meeting Tuesday into Wednesday. So awkward, could cause a big gap in the morning, but probably be flat until the Fed announcement after that. We'll see how that plays out. Thursday, we've got initial and continuing claims, personal income and spending, PCE, prices, and Chicago PMI. And then on Friday, ISM index, construction spending, and auto and truck sales. So obviously the focal point of the week is going to be that Wednesday with the GDP first look, the CPI. Those are the CPI is one of our big three. GDP is a quarterly number that's huge, and the Fed announcements once every 6 weeks, all on the same day. At least it gets it out of the way. That could have a lot of movement on Wednesday. Tuesday morning's got some data too. And then we have Thursday will be the last day of the month. Obviously, you get the chance of some window dressing there, which could be a little less interesting. So that's what we see for the week going forward. We will be calling it as usual from the lab and having our picks on our reports. Hope to see you there and hope to make some money. Have a good week.